Hi, and welcome to the latest Sharesify podcast, where I'm joined, as always, by my good colleagues Steve Frazer and James Crux. How are we doing, gents?
All good. Hi, Ian.
Yeah, I'm a little bit croaky, so you have to bear with me, everyone.
Okay, yeah. Well, I'll save your voice for the moment then, Steve. So as we sit Wednesday lunchtime, FTSE's down around 3% so far this week. FTSE 250 is down slightly more, around 4%. Big loser in Europe has been the DAX, which was heavily hit on Monday and Tuesday. It was down 6%, rebounding quite strongly today. But the surprise big loser of the week is the Kospi in Korea. Now, we know that China and Japan are big importers of foreign crude, but I don't think anybody pinged the South Korean economy as that big a victim. But the Kospi's off 12% today, biggest one-day loss in its history. So, Steve, talk us through it. What's it all about?
Surprisingly, I only found this out the other day, but South Korea is the third largest importer of crude through the Hormuz Strait. So the Hormuz
Ah,
Strait is that little narrow bottleneck between the Arab Emirates and Saudi Arabia, where all of that Middle Eastern oil goes through. And South Korea is a major importer of that. So closing the straits down is obviously going to put a real strain on its access to oil. Japan, the same, the fourth biggest importer. China, though, by far the biggest, nearly 40% of all Hormuz Strait exports goes to China. So that whole region is enormously exposed to closing the Hormuz Straits. So that's really why those Asian markets are really feeling the pinch.
yeah, because of course, I mean, we're not just talking about higher inflation possibly from higher oil prices, but we're talking about maybe more, an economic slowdown if
Yeah,
it crimps
absolutely.
their economies.
I mean, you're talking about the cost of running factories and businesses, going up, powering, putting the lights on, everything could potentially go up in price. So you've got that inflationary pressure as well, which could ultimately roll into lower economic growth. So I mean, these are long-term plays, and we'll see how long the straits stay closed. But I mean, it's a big issue.
Yeah, of course. I mean, and then it presents a dilemma for global central banks, of course, because while on the one hand they want to control inflation, on the other they can't afford to, and they can't afford to cut rates really if inflation goes back up again. But at the same time, they don't want to see, their economies slipping. I mean, Europe, big importer of natural gas, so the
Yeah.
ECB's in a bit of a bind there. The UK already expectations have been reduced for rate cuts this year. And we're now not looking at any more than maybe 25 basis points, and that in the second half of this year. But it's not all doom and gloom. What are we seeing this week, chaps, in terms of market action? James, what's been grabbing you?
Yeah, I was struck by the move in Greggs. So one of the most shorted, actually the most shorted stock on the London market, wasn't it, Ian? But a nice little move after it maintained profit guidance for the current year. That's despite sales slowing in the sort of first 9 weeks of this year. So I think management is still confident that we haven't hit that peak Greggs, which is that big debate, that they overexpanded in the UK. They still reckon they can get to 3,000 stores. So that was an interesting one. And then just in the kind of sporting goods arena, Adidas record sales. On Holding also had record sales, but it's that issue of guidance. Guidance disappointed against the investors' expectations.
Really interesting,
Right.
James. I mean, because we've been talking with the big sports brands for a while now about them trying to cut out the middleman and circumvent, the high street chains, sports shops and stuff, and sell more directly to the public. Do you see any evidence of that's actually bearing fruit, that they're actually selling more directly to the public?
Adidas had really strong. I think it was near 20% D2C growth in the sort of last year. But Nike has had to go sort of cap in hand back to its retail partners after its kind of
Right,
D2C move
right.
backfired. And they gave the shelf space to other brands. So that would definitely be something worth watching.
Yeah, they're really interesting that.
Interesting that Greg, so vegan sausage rolls might be the new defensive play, are we thinking, James?
Yeah, very much.
Steve,
And goujons and chicken wings. Yeah.
Steve, you put a note out on how to add some defensive-ness to portfolios
I,
this
I
week.
wasn't I wasn't quite yeah I didn't look that far and wide, unfortunately. The vegan sausage roll index, maybe it can be like a bit like the Big Mac index,
Yeah,
assigned to testing times ahead.
get some in your portfolio. So what else? I mean, I was looking at the FTSE changes this week. We've got Tritax Big Box REIT going into the FTSE 100. That's the seventh investment trust I think that's a record, is it, James?
I think you're right. Yeah, indeed.
Um, IG Group joined as well, so that saw EasyJet and Rightmove booted out. And I think Ski Fund has joined the FTSE 250 as well, if I'm not mistaken.
I think you're right. Yeah.
That's the one run by Bailey Gifford, isn't it?
Mm.
Yeah, okay. Interesting you mentioned Tritax, because obviously it's a real estate investment trust. I mean, that's a sector that's been out of favour for eons. Do you perceive that as just they're just really performing outside, way beyond their sector? Or do you think this is a consequence of just other businesses are really underperforming, and so it's allowed them to sort of slip into the chips?
No, I mean it is all sort of down to the business actually, Steve, because obviously real high quality logistics assets are at a premium. If you've got modern, fully automated warehouses for logistics business near main arteries, motorways, railways, etc. There's a real premium for those assets, and the customers are willing to pay up because it's actually a fraction of their total operating costs is the rental on these places. But you'll like this. What else are they big in? Data centers.
Yeah, right. That doesn't surprise me. Yeah.
uh,
I mean, I suppose that the big issue with data centers is getting the planning permission, because it's a bit like the old big box retail out of supermarkets and stuff. And there had to be local authorities started clamping down, didn't they? Because they were just decimating huge areas of countryside that would otherwise be great for building houses. So I wondered if that might be another pressure point on data center expansion. Is ultimately, is there the space, and are we going to crimp housing opportunities?
yeah, absolutely,
Talking of
absolutely.
housing, Ian, you were writing about a particularly fascinating one today, weren't you?
I tell you, there's so many bulls. I hate to say, I mean, I sound like a broken record now, but there are so many bulls of the housing stocks out there, and I don't see it. I don't see where the upturn's coming from. So what Vistry said is basically what Taylor Wimpey said at the beginning of the year, that their margins will be lower this year. In Vistry's case, it's because they're having to give away more initiatives, more incentives to people on the open market, and they want to shift the inventory and get the debt down. So they said, yeah, margins are going to be lower this year. Oh, and by the way, we're not going to do any more buybacks once we finish the current buyback. Wallop, the thing was down
Right,
20% at the open.
yeah,
I think it's traded a little bit better since, but you know, go for infrastructure stocks. Look at what Galliford Try said today. Look at what Keller's said. Look at what Costain has said. Balfour BT, all these things, beating and raising. If you want to get into the construction sector, buy the infrastructure stocks, forget the housing stocks. But I'm not going to weigh on about them anymore. James, what else have we got this week?
We've got some more US retail names reporting. So Target were out yesterday, which the results weren't great, but there was a slight uptick in sales towards mid-February. So investors are kind of thinking maybe there's a turnaround just starting to happen there. We've also got Kroger, the grocer, and Costco, and I think the Gap as well. So ones to watch, definitely.
Oh, for
and then
sure. I mean,
tonight, of course,
Costco.
you've got Broadcom, which is very going to be very widely held. It's again, it's chip technology. It works generally in the ASIC side of things, but it's been an absolutely storming success over the last 3, 4, 5 years. One thing to watch though, its growth has been driven to some degree by large acquisitions. Checking out its balance sheet and its debt ratio will be something that the market would likely home in on. These results were coming out after the bell this evening, UK time, so
Right.
around 9:30 tonight.
We'll keep them peeled, Steve. And then bringing it back to the UK, we've got Domino's Pizza tomorrow. That's another one on the heavily shorted list, I think, isn't it,
Mm,
James?
it is indeed.
We've
Yep.
got ITV, the perennial takeover candidate. We've got Wreck-It, we've got Rent to Kill, we've got Spirent, and joy of joys, Taylor Wimpey, another house builder.
Yeah.
So with that, we'll wrap it up there. Thanks for watching. If you've enjoyed this on social media, then don't forget to follow us and like. Ditto if you're watching this on YouTube, like and
And just before
follow.
we go, actually, it's worth flagging to listeners that the next Wednesday, so I think it's the 11th thing, yeah, the 11th of March, we're going to have a guest on from Winterflood, and they're going to be talking about all things investment trusts. So please come and switch on and join us for that one. That should be a really interesting conversation.
All right. Well, there you go. That's it from us. Cheers.
Take care.
Cheers.